Hey guys, Tony Denaro here. Welcome back to the channel. I've got some updates to go through with you for Bed Bath & Beyond this February 7th. Pricing information on the share offering, who bought those, where that money is going to be going, what that might mean to the company. And I want to go through that with you. This is going to be a financial analysis of this share offering. This is not a hopium video talking about Ryan Cohen or Carl Icahn saving the company, but rather what exactly is this share offering? Where's that money going? How does that affect you as a common stockholder? What about the dilution? What's going on with the price? Lots of stuff to talk about. I'm going to do it as quickly as I can. Let's get right into it. First of all, I want to apologize for not getting this video out last night. I spent a lot of hours going through these updated documents. Even the experts are having a hard time figuring out all the complex financing and structuring. But after my analysis last night, I did at least get word to the folks in the Discord that I did not recommend holding Bed Bath & Beyond overnight because I did expect the price to drop today. And yes, Bed Bath & Beyond did indeed go down today. It opened today at $3.12, closed the day at $2.61. A loss of 13.29% on the day. In after hours, it's currently trading at $2.59, down almost another 1%. In Ortex news, the short interest is still showing high at 46.74%, and the cost to borrow at 439% average. You can see that there were a lot of shares returned today here in the bottom left corner, but also a lot of new shares borrowed. Why is that happening? What's going to happen to the short interest as we get into this dilution? I will talk about that in a couple of minutes here in this video. In the video I did the other day about Bed Bath & Beyond, folks wanted me to talk about the threshold list, reg show, and the failures to deliver. Yes, Bed Bath & Beyond is on the Nsdq threshold list. It has been for about 15 days. I am aware of that. And if we look at the failure to deliver data, the last official data from the exchange on January 13th, there'll be an update coming soon, but January 13th, the fails were sitting at 4.7 million, and that is about 4% of the float. The reason I don't usually mention threshold list or failures to deliver is I think that it is mostly overdone in the retail trading community, be it on YouTube, Reddit, StockTwits. It is an interesting data point. It is one that I track, but it's not one that I hype people up with. Now, I do know that a lot of people add up all the failures to deliver in a table like this and say, oh, you know, there's hundreds of millions of failures to deliver, Tony. But what no one ever shows you on social media, because they carefully clip this out, is this far right-hand column where the fails are closed out. That being said, there were 4.7 million on January 13th, and having this high number of fails and being on the threshold list is indicative of parties not being able to have the shares available to deliver when T+2 happens. We already know that this stock is hard to borrow, and I would imagine that the shorts are counting on the price being driven down so that they can take advantage of buying back at a lower price, or perhaps they're going off to the obligation warehouse to try and get some shares. We will see what the fail to deliver data looks like on the next update. Now, as we get ready to go through those SEC filings at a very high level, I want to kind of level set where I'm coming from with you when I talk about doing a financial analysis and impact assessment of the share offering and the dilution. It's important to note that Bed Bath & Beyond is a company with declining revenues. This is not a recovery play at this moment. This is a company in severe distress, a company on its last leg. That's not my opinion. That is from the financials. The revenue in 2020 was over 11 billion. You can see right here in the middle of the screen, declining to 9 billion in 2021 and to 7.8 million in 2022. Earnings per share was at negative $4.94. It fell to negative 5.64 in 2022. There are times where a share offering or dilution can be absorbed by a company, its common stockholders, without a huge impact. But in order for that to happen, you need to be in a situation where the company is growing, or revenues are coming up, where earnings per share are getting better every quarter. But that is not the case here. We're actually doing a share offering, a dilution into a company which is on a negative trajectory, both in terms of revenue and earnings per share. And so it's not going to be tolerated as well in this instance. The February 7th filings were both an 8K, which I'm going to go over right here, and a update to the prospectus. Let's go through a couple of highlights on the 8K first. This 8K specifically addresses the lenders agreeing to waive any outstanding defaults under the existing credit facilities. The first item of interest is that ABL facility, their revolving credit line, their credit card, if you will, got smashed in half. You can see highlighted right here in yellow, the total revolving commitment was reduced from 1.13 billion to 565 million. No more ability to borrow 1.13 billion. It's been cut in half. Also, the outstanding principal amount now remaining will be $428 million. And the FILO lender, 6th Street, kicked in an extra $100 million to help the company out. That will get tacked on to the FILO credit facility that Bed Bath & Beyond has with 6th Street. Under this amendment, when we're looking at this prospectus, this share offering, this dilution, it's important to note, as it says right here in the middle, that the company, Bed Bath & Beyond, is required to apply all net cash proceeds received from the new FILO loan and the share offering to repay outstanding revolving loans under the ABL facility. So JP Morgan says all this money that you're getting from your share offering and that $100 million from 6th Street, you need to first pay us off with that money because you're in default and we want you to get caught up. As we go further into this 8K, we have some details on the closing of this share offering. The company will issue 23,685 shares of preferred stock, 84,216 preferred stock warrants, and 95 million in change on common stock warrants. This offering was closed on February 7th. Bed Bath & Beyond received gross proceeds of $225 million, and they may receive up to an additional $800 million of gross proceeds in subsequent closings over the next 10 months. As we just discussed, the company intends to use all these proceeds to repay outstanding revolving loans under the ABL facility. And in addition, remember those bond payments that the company missed on February 1st? It says here the company will be required to use availability under its credit facilities to make the missed interest payments. That was $25 million on its senior notes by March 3rd. So the company does intend to make good on the missed interest payment on those bonds. Final item of interest in this 8K, right here at the bottom, proceeds from the conversion of warrants to purchase preferred shares will also be used to repay outstanding amounts under the ABL facility, with half of such conversion amounts being applied against the borrowing base of the ABL facility. Again, they're just restating that this share offering is to get caught up on what Bed Bath & Beyond owes to JP Morgan, to get that ABL facility caught up and the defaults cured. As we move over to the prospectus update, this is where things get a little more complicated. This is where I spent the bulk of my time last night trying to sort through what all of this meant. But basically, we know that the company is selling 23,685 shares of preferred stock at a value of $10,000 per share. And when all of those shares are converted into common stock, that will equate to just over 99 million, let's call it 100 million shares of common stock with an alternate conversion price of $2.37 per share. There are also common stock warrants, 95 million of them with a conversion price of $6.15 per share. And then there are these sweeteners, these preferred stock warrants. It says that prospective investors that purchase 75 million or more of our convertible preferred stock and common stock warrants will receive a pro rata interest in 84,216 preferred stock warrants to purchase 84,216 shares of convertible preferred stock. And these preferred stock warrants have a sweeter price with an exercise price of $9,500 per share. Now, I've seen a lot of people speculating, when can all this conversion happen? And some people are saying February 27th. Some people are saying 90 days from now. I don't really know why they're focusing on dates down lower in the document. It tells us right here that all of these shares and warrants are immediately convertible. It says down here at the bottom, at the option of the holder of the convertible preferred stock at any time and from time to time, they may be converted. It also says that in the original prospectus, the preferred stock is convertible at any time at the option of the holder. The common stock warrants are immediately exercisable at any time at the option of the holder. And the preferred stock warrants are also immediately exercisable at any time at the option of the holder. There are some additional sweetheart terms in this deal. How about a buy one, get one free? It says here, if the holder of common stock warrants also holds preferred stock warrants, then the number of shares of common stock issuable upon the exercise of the common stock warrant shall automatically increase. Yes, the common stock issuable shall increase. How much bonus do they get, would you ask? It will increase by 50% of the number of shares of common stock then issuable upon conversion of the convertible preferred stock. So it's not a buy one, get one free. It's a buy one, get 50% free. Not a bad deal, right? You wonder why an institutional investor might be willing to take the risk to buy these preferred stock and these common stock warrants. Well, these are the type of sweeteners that they get. The more you buy, the more bonuses you get. The more dilution you get for free. The more shares you get to sell to retail who's willing to snap them up, and you got them completely free. Now, when it comes to the conversion price of these preferred shares, this is where it got a little bit confusing to me. I don't know that I have this 100% correct, but I just want to point out the language that I'm seeing here. We know that at the top of the document, it said the conversion price was $2.37, but it does say here that it can be converted at a conversion price at the lower of number 1 or number 2. Which one's lower? $2.37 or number 2? Number 1 is the applicable conversion price in effect on the conversion date, the $2.37. Number 2 says the greater of 71 cents or 92% of the lowest volume weight average price of stock during the 10 consecutive previous days. Now, when I do the math on all of that, if I say the lower of A or B, the lower of 1 or 2, 71 cents is lower than $2.37. So as I'm reading this, and I could be wrong, the people that are buying these preferred stocks have the ability to convert as cheap as 71.6 cents per share. So that covers the conversion of the preferred shares. This next paragraph says that at any time after February 27th, Bed Bath & Beyond may require the holder of preferred stock warrants to exercise those preferred stock warrants into preferred stock shares. Once those preferred stock warrants are converted into preferred stock shares, then the holder of those newly minted preferred stock shares has the option to then further convert them into common stock. And that would equate to about 373 million new shares of common stock. So what does that mean to me, Tony? I don't want that many details. I know some of you want the details. That's why you're here on my channel. But to boil it down, the free float of 117 million shares is going to go somewhere north of 800 million shares, as you can see by the chart here on Dilution Tracker. That's accounting for a conversion of all of the preferred shares, all the preferred share warrants, and the common stock warrants. Now, I know some of you are going to sit back and say they're just going to hold on to these preferred shares because there's a deal brewing. Maybe there is, guys. I don't know. Nobody knows. That is a lot of speculation. I can tell you in my experience, once they have these and they got these sweetheart deals baked into it, especially if they can convert them at 72 cents, my expectation is they're going to be converting these and selling them into the market. And after February 27th, I would expect that Bed Bath & Beyond is going to take advantage of that clause that says they can ask the preferred share warrant holders to convert them into preferred shares, because Bed Bath & Beyond wants the money they can generate from that conversion to further pay down the debt, put some cash on the balance sheet. And if you converted preferred share warrants into preferred shares, you're probably going to further convert those into common stock and sell them to retail because you got a sweetheart deal on those. So in light of all this new dilution that's going to be coming into the float, I think it's fair to assume that the short interest that we're seeing right now of 45% is going to come down, because as new shares are added into the market, that reduces the percentage of the float that is shorted. Although the shorts could go in and take these new shares and short those down too, and that short interest could stay high. The company still has not really improved its revenues. They got stores closing. The short still may smell blood, and you still may have a high short interest. But retail is going to need to pony up a lot of money to absorb all of this dilution. I cannot tell you with any certainty what the price is going to do, and I certainly am not a strong believer in some of the more fabulous tales that are going around Reddit and some of the other YouTube channels. If I were investing in Bed Bath & Beyond, which I am not, I would be very cautious about believing some of the more fanciful stories on Reddit, Twitter, StockTwits, and YouTube talking about a massive run-up in the price in light of the fact that this company's fundamentals are falling, they're getting worse, and you have this massive dilution coming. I think this is, in fact, a sweetheart deal for some of these institutional investors to support the company, fix the balance sheet, but to have retail buy up those shares and enrich the institutional investors that are buying the preferred shares and the warrants. What I will be doing is keeping a close eye on this ticker and setting some alerts in case for some reason here in the next week or so, the longs get an advantage over the shorts before the dilution really starts coming in force. If there is momentum on this stock on any given day where I can trade it for a day trade, I will certainly be taking advantage of that. These are my thoughts, my analysis on the recent filings and what is going on, what I think is going to happen. There is absolutely a chance that I could be wrong. If you're counting on a merger or an acquisition, I wish you the best of luck. At the end of the day, all I want to do is see you guys make money and, more importantly, not lose money. So do your own due diligence. Read through the documents yourself. Don't just go by advice you're getting on social media, including this channel. Let me know if you have any questions or comments down below. I am Tony Denaro. I want to thank you for watching. Don't forget to hit the like button. And if this is your first time here, please don't forget to buy and hold that subscribe button. And I will see you on the next video.
Talking like you think you're royalty. You think that I'm afraid.